Fantom has gone parabolic. The last few days, the price has gone up, up, and more up. Is now the right time to buy? Are you feeling the FOMO, the fear of missing out, or are you in great profits? Well, today we are going to look at what is likely to happen next. This is where most people lose, when to take profits and when to buy. So today I'm going to show you a mechanical, objective way to decide it's not the right time to buy, or should you be looking to lock in some profits if you are already doing really well with Fantom. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Been focused on trading currencies for around 15 years, but now I focus on blockchain and crypto. So let's dive in to Fantom. Wow, look at this price action. Wow, this is from, this low was September 21st, but especially from October 4th. So it's only been, 5 days? We've just had it's almost just pure vertical. Look at that. Wow. That's some amazing movement. And also just from, mid-July? It's just been going higher and higher and higher. So today, we're going to look at, it's now the right time to buy. What is the likely high probability price local top? Probably do some math as well, because even though the price action looks amazing, how much money would you have made if you managed to buy from, maybe down here, We want to look at that as well. But first, let's just look at what is the likely price action is now the right time to buy, because most people, most amateurs buy at the top, right? And then the price starts to go down. So you want to know the typical, most common profit-taking behavior. No matter how strong the fundamentals, there's a lot of speculation in all markets, let alone crypto markets, especially crypto markets. So we can predict with high probability when is profit taking likely to occur on as a mass psychology, and then we want to be prepared for that. So let's look at this. So first of all, with Fantom, as of early this year, January this year, we had a nice move up. We're going to call that a wave one. We use Elliott wave and Fibonacci over here. It's so powerful, especially in crypto. If you've been following my stuff, not everything's bang on because we're in a probability game, not a certainty game. But you'll find more often than not, the patterns kind of unfold really, really textbook. Here is a wave two. And then typically what we're looking at is what's a typical wave three. And we're going to get quite detailed. We can do 2 degrees accounts, which I'm going to show you. So let's just label this out so we're really on the same page, because this is going to give you a massive edge. And this applies to all markets, all cryptos. Around 50 to 60% of the time, you'll find these patterns unfold. Now, this is not a typical wave two, by the way. Normally it occurs in 3 waves, but because we've gone higher than this point over here, higher than this point over here, the only conclusion is that's a wave two, not a typical wave two, the way this part unfolded. But hey, look, the markets are the markets. So we can actually remove the question mark because we made that new high. But now what I want to do with you is, in fact, let's do it this way. Because a lot of people I found don't get this part. So let's just take the data back a little bit and say, look, when the price was like this, let's just say we assumed that this was a wave two, we can predict with high probability, maybe even if we just go when the high was taken out, let's just take the data forward and the high was taken out here. Obviously, we know what's happened now, but at this stage, we can still project what's the likely further upside movement. And there's two numbers. There's a typical wave three price zone. We use something called Fibonacci over here, where we do price analysis. And if you haven't already, take my free Elliott wave and Fibonacci masterclass, because this is so powerful. Taking profits, you want to have objective mechanical information that allows you to take profits in high probability tops. So now this is 2 lines, and the 2 lines are 1.618 and 2.618, right? And what typically happens is most wave threes get to this point, and then if they overextend, they typically top out at this point, and then we should anticipate a wave 4. So now we can also do one other thing actually, ahead of time, because sometimes like, okay, Jagir, there's 2 big price zones. One is at, what is that? $1.60 and the other is around $2.60. That's a big difference. Can we project in advance which one of those is likely? So I use something called an external retracement, and this is a relationship between wave 2 and wave 3. And the typical relationship is 1.618 and 2.618. So now we've got these two zones. Another thing we can also do is time analysis. Again, I'm going to do it quite fast because I'm going to give you high level. I cover all this in my courses, in my masterclasses. Wave 3s typically, as a minimum, take around the same time as a wave 1. So we can actually just say this is how long a wave 1 took to form, which was, what's the date here? 30th of October. We should expect the end of wave 3 as a typical minimum. That's going to be a big clue for us. And then we're going to bring it up to today's data. So we go, look, at the time, this could have been a potential wave 3 top, right? Yeah, we have to know that, right? And we wouldn't have known in advance because it's hit a typical wave 3 zone. But we would have taken momentum into account as well. We would have taken sub-degree counts into account as well. But today, we're going to focus on where is the data today. We can see we did a bit of a correction, and then it just shot through, right? It just went boom. And we're here today. This is where we are today. So now, the very fact that we've now shot through this price zone here, done a bit of a correction, and then we're moving next to the next peak, but we haven't hit this minimum typical time it takes for a wave 3 to unfold. Now this is where I'm going to give you some info, because if you've bought Fantom down here and thinking when should I take profits, and if you're watching Fantom, because a highly searched coin right now is like, should I be buying here? A lot of people, amateurs, retail investors that are not used to seeing this are going to think Fantom's only going to keep going up. Let me show you something. I need to show you something, because some people don't get the probability game. I'm going to show you a video I did on Dogecoin. Hey, whether you love it or you hate it, Dogecoin follows brilliant technicals, right? And it was way back. It was way back in. I'm just going to scroll through my YouTube channel. It was an early video, and I did 2 Dogecoin videos on that same day. But I want to show you something because it's looking not exactly the same, but similar.
Hit the bell notification because it means
When I saw this pattern, this was Dogecoin. If I just bring up, I can draw on the screen. Yeah, what I saw here was a 1, 2, 3, 4, 5. And what I said in the video was, hey, look, when you get a 5-wave sequence like this, you should expect a correction. And the correction in this case was 78.6, and it unfolded textbook style. If we look at a Dogecoin, in fact, I'm going to show you. Let me show you, because I want you to get this. Let's just open up a Dogecoin chart. I know you might go, but Fantom's on a whole different level to Dogecoin in terms of fundamentals and so on and so forth. But psychology is psychology. Buying behavior is buying behavior. Let's just go here. Boom. Let me get rid of these lines as well. These lines. Bear with me. Annotation. Clear old drawings. Here we go. All right, Dogecoin, right? That video that I just showed you a second ago, this one here, when I said, look at this high, because it unfolds more often than not. Not every time, but more often than not. And then what happened with Dogecoin? Well, let's just look at it. This is the weekly chart. Let me go on the daily chart. Right? Forget all these lines. Forget all this. But I just want to get this message across to you. This is when I did the video up here. Right? We saw this 5-wave sequence up here. And in the video, we said, look, we should expect a minimum correction here, but the typical maximum correction is down here. And guess what happened? Like bang on. It went all the way down, literally to that maximum zone over here. That's a big drop down, 78.6%, right? Are we going to see that with Fantom? I don't think so, because there's a slightly different wave structure with Fantom, right? We've got this big pullback, this move to the upside. So what is this looking like? Well, it's looking like we're forming a wave 3, but I don't think it's complete yet. I think we've got a little bit of upside movement to go. And I'm going to tell you why I think this. Because what's really powerful, I covered this in my Elliott Wave and Fibonacci free masterclass on how to break down the wave structure. And when I say wave structure, what I'm really saying is the buying and selling behavior of mass and herd mentality. That's what Ralph Elson Elliott figured out. Ralph Nelson Elliott figured out back in the mid 1800s and early 1900s to stock markets and other markets and commodity markets. And now it just applies incredibly well to cryptocurrency. So what I'm seeing here for this part of the movement is it's actually subdividing. Look at this: one, two, three, four, and then we look like we're on a wave five of a wave three, right? This is probably the worst time to be buying. Worst time to be buying. One of the best times to be looking to take profits. Looking to take profits. Really, really important. Really, really important. So let's break this down for you. This is a wave one, two, pretty clean. A wave three, look at this, ABC, textbook wave four. And it looks like, I don't think we've come to the end of it yet, but it looks like we're forming that wave five. Hence, I got the wave five or wave three with a big question mark. Why? Because it hasn't been confirmed yet. And I'm gonna show you some stuff now, which is gonna blow you away. Because more often than not, again, not guaranteed, because with crypto, you often find many coins overextend. But this is an overextension wave three, 2.618. Get rid of this. We even get rid of this, right? So let's just zoom in a bit more. I'm going to do some extra price analysis because this price analysis here is on a macro wave count. This zone here is macro wave count. What do I mean by macro? It means the big picture. This big move up, big move down, big move up. Now we're going to go to an intermediate picture. What are you talking about, Jiggy? Intermediate. Well, this count here, 1, 2, 3, 4, 5 of the macro is the intermediate count, this wave 5. And what we can do is we can peg the most common top of a wave 5 zone. And if it clusters over the macro, the intermediate clusters over the macro, that makes it a very high probability price zone. So we want to look at that objectively. So let's do it. Let's do it. Let's go. So what's the typical? One of the most powerful is when you measure a wave one. This is what we're calling the beginning of a wave one. End of a wave two is the beginning of a wave one of a wave three. What? Don't worry, I'll cover it in my free Elliott Wave Masterclass and Fibonacci because it is a lot at the beginning, but it can be very, very powerful when you start to see these patterns unfold time and time again. We're measuring the wave three and we're going to project it from this wave four low. The key numbers that we want, the two key numbers is 62% and 100%. Look at that, clustered right over, right over. So we've got these two zones, right? The higher probability zone is going to be up here. Why? Well, quite frankly, because we've shot past this one like it wasn't even there, and the wave structure as well. So we'll keep both zones there, but this is going to be the higher probability. There's a few others that we're going to do as well. I'm going to just zoom in like this now because we're focused on this part, the intermediate count. I'm going to just get rid of these lines so we can keep it like this. Look at our textbook, this wave 4 is. This wave 4, it's an ABC clean zigzag. This is one of the most beautiful patterns. If I can draw it out. A, B, C, textbook. And we could have projected this. If you're trading this, this is quite easy to spot when it unfolds like this. In fact, do you want to see it? I'll show you. Let me show you this. Because I know it's after the fact, but it's good to know this information. And again, if you want to just skip to the punchline, I think I will have timestamps in this video so you can stick to because I think there's a good lesson here. Because these patterns unfold time and time again in multiple cryptocurrencies. So what we want to do is just take the data here, right? And if we just ignore that movement and we just look at this, this is pretty clean, pretty clean. 1, 2, 3, 4. What's the typical wave 4? Well, typical wave 4, if you measure wave 3, again, I cover this in my Elliott and Fibonacci masterclass, free masterclass, by the way, because I want you to have this because I know you're looking at a lot of tokens. The most common is 38% and then 50%, and the typical maximum is 62. But more often than not, it's the 50 to 38. And we can see it's in that zone, more towards the 50. And what we will do at the time, again, we're doing it in hindsight now, but there'll be many times you'll see me do this in foresight. And again, we never know what's going to happen, just high probability. More often than not, I look at that, beautiful, beautiful, pegged it to the, look at this, look at this. This is the 100%. Basically what we just did there is we measured this wave A and projected it forward from wave C. Because wave C is often mimic wave A. And then what you'll see is it tagged that 100%. So we could have predicted this in advance and we would have used the momentum indicator. This one's not that clean. It's a bit choppy. Um, but it would have done the job, because on the next bullish reversal, we would have said, which would have been here, this bullish reversal, the blue line goes over the red. You can see it's close, pretty much bang on the low. And then you would have had some type of entry strategy, of a 1 bar low or a swing high. Some people will be a bit more conservative and say, I want to go long if it goes over the swing high, and others will use a candlestick. I know I'm not covering a lot here today. If you're being, one of my strategies I use is 1 bar high. So you would have gone, if it goes above this high after the next bullish reversal, you'll go long. And then if you had a stop loss, you would just put it below the swing low here, down here. So that will be your capital exposure. And then you just go long. I know I digress, but I just thought it would be worthwhile you seeing how beautifully Elliott wave and Fibonacci applies to all markets, all time frames, especially crypto. Crypto is less than 12, was it 12 years? 12 years young. Bitcoin first was mined in January 2009, so it's 12 years. But these projects like Fantom, how long has Fantom been around? Fantom, if I just scroll down to coin market cap and look at this, imagine if you got in right down here, that would have been a whole different ball game. Let's just go all, and Fantom was around, 2018, January 2018. And the price of Fantom then was 2 cents. Jesus, 2 cents, 2 cents. And what is it today? It's $2. Yeah. So what's that? It's a 100x, right? 100x. Nice. Yeah. Well, you would have had to be impatient. Down here was even 2 cents. Even in March last year, or December last year, still 2-3 cents, and then it took off, right? Then it takes off. And the great thing with crypto is you can invest like a retail venture capital investor or an angel investor, meaning you can get in at young projects when they're still at development phase. That hasn't been possible before. You can't do that on stocks and shares unless you're a sophisticated investor. So let's stay focused. I know I'm getting excited because I love it when these patterns unfold. But what I realized listening to your comments, I read every comment. I aim to reply to every comment in YouTube. Is most people don't get it because they haven't got the experience. So I'm trying to give you some knowledge here. Now, what we're going to do to finish up is we got this zone. We're going to include now a third count, degree count. We got a macro, we got an intermediate, and now we're going to go micro. You go, hang on, Jagir, what are you talking about? All right, let's get this clear. Let's do it in colors. Right, we're going to keep the macro in black. I'm going to change the intermediate to amber or orange. Let's just change it to orange. Yeah, so we got this. I'll put the waves back on for a second. Yeah, so we got intermediate in black. Sorry, macro in black. We got the intermediate in amber. Now, let's actually keep this wave count here. Now, it hasn't completed yet, and we want to wait for it, but it looks like a wave 1, a wave 2, looks like a wave 3. We should expect some type of wave 4, and then finish on a wave 5 of a wave 5 of a wave 3. Right? And when those coincide, that will give you a very, very high probability top. And let's just change this color to, let's just change it to green. Let's see if green stands out. Green. It's not standing out that much. Let's do red. We're directing blue. It's a bit too close to that one. Purple. Let's do, yeah, we're just gonna have to stick with green. We'll stick with green. We'll just make it, we'll make the line much thicker. We'll make it thicker. Yeah, so we'll just do it like that. Right, so now you got 3 degrees of counts. You got this wave 1, 2, 3. That's the macro picture. You've got this intermediate count 1, 2, 3, 4, 5, which is marrying up. Now we've got this cluster. And then you got this green 1, 2, 3. What should unfold is some type of 4 and then a 5 to finish it off. This, would be a very good time to consider exiting. And what you're aiming to do with really taking your profits at the top is what's going to invalidate the wave count or confirm the wave count. And they're the kind of things you want to be looking for. So let's finish up on a couple of things. Let's just get rid of this. I'm going to just quickly remind ourselves on the weekly momentum. It is bearish, even though we've been making higher highs. So we want to keep that into account. And so sideways to down, I think we're due now for the wave 4. So we've got the 1, 2, 3, 4. We should anticipate a wave 4. And once we get a bit more clarification on the top of wave 3, we can kind of look at that. So I reckon we'll probably see, again, this indicator is a bit choppy, but it does the job what we need it to do. Sideways to down, that will probably coincide with the wave 4. And then the next bullish reversal will probably coincide with the wave 5 of 3 top. And then on the next bearish reversal, that's when you should be potentially looking to take some money off the table, because it depends on how sophisticated you are. If you're used to taking profits, if you're in great profits. One last thing I want to finish on is Fantom's quite a mature coin, right? It's top, what is it? It's ranked as, based on its market cap, was that 30, 36? 36. It's a almost $5.5 billion market cap. Trading volume is 2 billion, so that's really healthy. It's like 50%, which is great. It's like a good ratio. It says it down here. Volume to market cap ratio 0.45. So that's really healthy. But it's now the right time to buy. And are you looking? It depends. If you're a big time investor and you got a big capital you're playing with, and you need liquidity, meaning easy to sell with high amounts, then Fantom's a great one, right? But let's just kind of put everything into perspective now, yeah, because this is important. Most people miss this because most people don't do math. Most people don't like math. I used to be a math teacher, qualified to teach up to A level as a teacher in secondary school, and I got a degree in sports science and mathematics. But this is simple math. What we want to look at is, okay, what is the price gain on here? Because when you look at it on a chart like this, you look at it like this, and you go, wow, look at that. Only if I bought down here, got all this price movement, what would my gains have been? And visually, it looks like a lot. But here's the funny thing. You want to hear the funny thing? If you had bought down here and managed to get that much, which obviously is a much smaller arrow, right? Much smaller arrow in terms of distance to price, even if it was not even that top. Which one would you take? Well, visually, you'll go, well, I would take this one because the profits would be higher, right? I go, we should do the math. I think this one's the one I would take, and I'm going to show you why, right? So let's just look at this, because most people miss this. And it's important to understand, very, very, especially if you're not using leverage. So down here, the price was, let's just call it $1, and let's just say it gets to this top of $2.50, right? So let's do the math, right? $2.50 divided by the starting price of 1 is obviously going to be $2.50. That's 2.5x, meaning if you invested $1,000, you would make $2,500 minus your original capital. So net, you would make $1,500. Yeah, makes sense. Whatever your number is, you can do the math. 2.5x. That's what that move is. That's healthy. That's really, really healthy. But it's really for the bigger investors that are playing with big money. Yeah, because if they're putting 100,000, if they're putting in a million, if they're putting in 10 million, 2.5x gross is really significant, right? That's really, really healthy. Whereas if you're a retail investor and you're much younger in the terms of your portfolio size and you're putting in $100, okay, we're not going to complain about $100 converting into $250 because that can be significant for many. But $150, that's what are you going to do with that kind of thing? So let's look at this tiny arrow, right? This tiny arrow, and we'll finish on this. All right, the price down here was 0.018, and the price at the top of the arrow was 0.39, right? So we said the end price was 0.39 divided by the starting price. Again, let's just make sure you got it right. We did 0.0, let's say 18. You can tell I'm short sighted, right? I need to get some. I'm not a context guy. Actually, I got it here as, yeah, I called it 0.018 divided by 0.018, right? What do you think the multiple is going to be? You think it's going to be bigger than 2.5? Well, I think so. It's going to be 21. Yeah, 21.6. Let's call it 22, right? What does that mean? That's a 22x. So that means if you invested 1,000 here times 22, well, you made 22,000. Now, this may not work for more mature investors. Why? Because of the volume. And what do I mean by volume? Well, if we go down here, what was the volume down here? Okay, the volume is reasonably healthy. It was like 5 million. It was 9 million, 8 million. Whereas now the volume is like 2 billion, right? 2 billion daily volume, right? 2 billion. But down here, it was 4, 5, 8 million. So if you're investing 20 million into a project, well, you can't in Fantom because the daily volume is 10 million. So 20 million is too much, right? So for big time investors, like bigger players, they're going to move the market. Whereas now, with 2 billion market cap, you can easily put in 10 million, But for younger investors, what you should be looking to do is part of your portfolio, looking for younger projects before it takes off. Because once it's in the $1 billion market cap, even though the price move, like this price move, looks impressive, it's 2.5x, 2.5x. Whereas this smaller arrow is 22x, right? So you can take that into account. And also, let's just finish on, I say finish, I keep saying that, don't I? Should stop saying let's finish on this. Back in when the price movement was down here, the chart did look like this, right? It looked like this. And it's only when the bigger moves happen that everything else looks flat. Everything else looks flat. But at the time, this would have looked very significant. And what you're looking for is these younger projects. And I say younger projects, these are still quite mature. But look at this. Let's just kind of show this. Look at this. A, B, C. Bang. That would have been just perfect buying opportunity. I'm just going to show you this because let's just say we had the data up until this point. I'm just doing this for the fun of it, but you got the main lesson for today. So if you need to go. I'm just gonna have a bit of fun on this because this is important. This lesson I'm about to show you, it's gonna blow your mind because the patterns unfold time and time and time again. I'm trying to get it across to you. It doesn't mean it's guaranteed because we're in a probability game, not a certainty game. But we can get high probability when we're using Elliott wave and Fibonacci. And if you haven't already, take my free Elliott wave Fibonacci masterclass. It's one of the best that I've ever seen. I'm not being biased because sometimes just people make it overcomplicated, and it is complicated, but we simplified it a lot. So I think you're gonna get a lot of value from it. But let's just look at this, right? This is what I show you how to do, right? Look at this. Let's just say this was the price action of a coin. Let's forget it's Fantom for a second. It's just price action. We're looking at pure psychology here. We've had this beautiful move to the upside. The price has gone from 0.002 to 0.055, right? So what's that? It's like a 10x. What was that? 0.02, 10, 20x, like a 20x, 25x. That's a 25x, right? Crazy, right? But this is what happens with younger projects. They move more. The movement looks less in the grand scheme of things, but because the token price is so low at the beginning, the relative movement is just much, much larger. But what I want to show you here, this is so important. One of the best times to buy is on the first pullback, right? So you got your first move up, and then you want to wait and be patient for a high probability pullback, right? And I'm going to show you, okay, we know what happened next, obviously, because we've seen the data, we've backdated it. But if this was live and you see me do this live, I'll do it with my private Telegram. We do webinars, we do workshops, and I say, look, give me your coin and we'll do a live analysis, because we've all got the information now. So we can do a few things. First of all, I'm calling this a wave. This is a wave one. It's just the first sequence. Don't need to label it. It's just the first impulsive move to the upside. And then we got a correction. So what am I seeing from a pattern perspective? Well, I'm going to anticipate at least 3 legs. We've got this first leg, looks like a second leg of a B, and then we should anticipate a wave C, right? Second, we're going to go, right, we're going to do a price retracement. What's a price retracement? We're going to measure this low, as in this low here, to this high over here. And there's common very common wave two price retracements, meaning how much selling occurs typically for a wave two. And the most typical minimum is 50%, 62%, and a typical maximum is 78.6%. I'm just doing it for the first time here because it's such a clean pattern. But that's not enough information for us. We can get more precise. So that's the macro count. We did this wave one, wave two. Now we're going to go intermediate. Remember talking about intermediate? What's the intermediate? Was the A, B, C, right? So then we can get a bit more precise. So we go, well, typically, more often than not, if we measure wave A, what we're calling wave A, and then project it forward from a wave B, more often than not, wave C's are 100%, like the same length, Basically, measure wave A, project it from wave B. That's what this red line represents. So now we've got a cluster. Now, straight away, there's a high probability price zone where we go here. I go, hey, guys, that's still not enough. We can get better. We can get better. We can get even more micro data. We can go microwave count. You go, what do you mean micro? Well, wave, I cover this in the masterclass. I'm telling you, man, it's a really solid masterclass because I show you how the waves break down more than 50, 60% of the time, which again gives you just a massive edge. This is now a microwave count. You see this? 1, 2, 3, 4. Looks like a 4. And then we should anticipate at least one more leg down as a 5. So then we got a macro wave 2. We got an intermediate ABC. And then we got a 1, 2, 3, 4, 5 on a microwave count for a wave C. So what we would anticipate is we'll wait a bit more for the data for this low to get taken out. Boom. You see that low? It gets taken out. Now we can be a bit more confident and say, oh, okay, this is looking like a nice wave 1, 2, 3, 4, and now it looks like a wave 5 is unfolding of a wave C. Let me just change this to a micro, get it green and micro. This C we're calling a intermediate, and then I'm just going to put in because I think this is helpful. This is such an important lesson. We're saying a macro wave 2, right? If we, this is, we're obviously just backtracking with the data, but you can do this in TradingView. This is TradingView, the software. You can get a free version and you can practice. You can practice this stuff. So here we've got the macro count. We've got an intermediate count. Now we've got a micro count. Now we don't know what it is yet, but guess what? We can use Elliott wave and Fibonacci to help us project what is the typical 5-wave zones and does it support? Because we're Sherlock Holmes right now. We're looking for clues. We don't know what's going to happen. It's only high probability. So we go, okay, what's the typical end of a wave 5? Well, we did it similarly, with the top of a wave 3 before with Fantom. This is still Fantom, but now we're going to measure on the downside because the same applies when you're looking for bullish movements, but also bearish movements. So measure wave 1 to wave 3, project it forward from the wave 4 high. Look at that. Look at this zone here. Look at this. 100%, bang, straight clustering over that 78.6%. So the most common ratio, especially in crypto, is 62 to 100%. And it's like bang on that range. Look at that. And you go, oh, it's looking like a very high probability setup. Hey, but we can do better. We can do better. You go, how can you do better than that? That's like really precise. I go, more often than not, we'll keep this part simple. More often than not, I'm just going to do one bit of time analysis. Time analysis. Not heard of that before. Most people say, I've not heard of that before. The time it takes for this wave A to form, normally has a real direct relationship to a wave C, right? And the most common is the same up to 1.618. That's the most common. So what we can do here is got a nice tool here, boom. And again, when you do my masterclass, you have the option of buying some of my courses. I made them super cheap, so you can get real, bite-sized chunk lessons on how to do this on a foundation level, intermediate level, and a really advanced level, both on Elliott wave and Fibonacci. Then you get invited to my private Telegram, where we can have more intimate conversations in the sense of coins and everything else. And then there's some other things that we do, but we also do some live workshops where I do this for you, because I know it takes time to learn. It's not easy. I'm just seeing which one's the lower part here. I think this one's slightly lower. So this is the time, and we're going to project it forward from this high. And this is the common area, But because the wave 3, 4, 5 has gone beyond this, then we say is likely going to end at the 1.618 zone. So we've got this zone over here. So we've exceeded the typical extreme. So we should be at or near the end of this wave C. Then we bring up the momentum and you go, okay, the momentum is bearish on the daily. Man, I'm giving you everything here. This is like, we're going to go into more detail in the masterclass. But look at this. The momentum gives us another clue, right? You go, what do you mean another clue? Well, look what this red line, or blue line crosses over the red. It's in the zone of this low. This one in the zone of this low. This one in the zone of this low. So it helps us. So we're looking for momentum. We're looking for pattern. We're looking for price. We're looking for time. When you got a confluence of events, 3 or 4 things telling you that we are likely to see something occur, then it makes it a very high probability. It annoys me when I hear comments where people don't get probability. Okay, maybe it's because of my math degree or when I did statistics and A level where we worked with probabilities, right? There's no certainties in this game when it comes to any investing. There's no certainties. It's all a probability game. We could, I'm not going to do it today, but we could even go to a lesser sub-micro degree count on this part of the wave. This is only if you're a really short-term trader, so to speak, if you want to really maximize your entry point. But we're not going to do that. But this wave also tends to break down to 5. But what we can do now is we want a simple entry strategy. We can have swing high. What does that mean? Well, the first thing that will confirm this low and a trend reversal doesn't guarantee it. It's the first major signal is the price going above the last major swing high, which will be like this, right? And the other thing you can do if you want to be a bit more aggressive and get in sooner, because some people say it's hard or impossible to buy the bottoms and sell the tops. Hey, I'm going to say, hey, you obviously don't know about Elliott wave and Fibonacci, right? What we're going to say now is this. This is a good trade strategy. On the next bullish reversal, where the blue line crosses over the red, enter on the 1 bar high. What does it mean 1 bar high? Well, it means the last bar, I'm going to go zoom in over here. The last bar over here, when the blue line goes over the red, when the price exceeds the last bar, that's your entry point. And your stop loss, if you use a stop loss, you put it on the 1 bar low or just below the 1 bar low, which is also the swing low for the wave 2, wave C over wave 2. Again, if you're new to this, I know waves are complicated. Everything is difficult before it's easy. However, that's why I created the free Elliott wave and Fibonacci masterclass. I'm telling you, I put a lot of time to simplify this whole thing. So let's just do 1 day at a time. Bump, bump, bump. And we can see that the blue line, let's just zoom in. Let me just double click it. You can see the blue line has crossed over the red. Now we say, right, on the next 1 bar high, which will be here, either the 1 bar high or the swing high. You can do it on closing day or the daily high. Let's just leave it like this. So you have 2 points over here. And then let me just have a look. Bump, bump. So you've gone a bit lower. Then we just change it. We'll just literally trail your entry point. If the blue line is now below the red, you'll cancel your order. You see, again, we're going with probabilities. Now the blue line is below the red. We go, oh, cancel the order. Let's just let it unfold a bit more. Boom, it's back up. So now we go, all right, put the order back in. Again, this is daily chart, so it will only be one movement a day. I'm not recommending you trade like this. There's easier and better ways of making money in crypto. But I know a lot of people are trading and don't have a strategy. Bang. This will be your entry point. Your stop loss will go below this low. And why do you have a stop loss? Well, there's no guarantees in this game. At the end of the day, the price could just go boom down, right? And it's not highly probable, but it's possible, which means you want to protect yourself from the downside. Or you just buy the underlying token and then just ride it out, but you're just optimizing a high probability entry zone. But what we're doing in advance as well, just so you're clear and we're on the same page, is what we're anticipating is if we measure this, we can even go to this low over here. If we measure this low to this high and project it from this potential low, 1.618 to 2.618 are the 2 price targets that we anticipate. So that, we can kind of have an idea on where are these price zones likely to occur. So now let's just forward the data, right? Let's just see how it unfolds. I won't do another entry. If it gets stopped out, hey, look, losing money is a part of the game. We want to minimize any losses, but taking losses and small profits and break evens, especially if you're trading like this is how you used to do it with the Forex markets. And let's just leave it like this and let's just let it unfold. I think we knew, so boom, you would have got stopped out. You would have looked to re-enter again on the next bullish high. So you would have risked, I don't know, 2 to 5%. You go bump, it went right into this zone. Look at that, it tagged the 78.6. So you go bump, it went much lower than here. Again, I forgot to mention it. We would have, part of our strategy said, I would have done this, is wait for the price zone to be met. We didn't wait for that. We should have waited for this price zone to be met, which should have been this zone here. Sorry, here. Yeah. But anyway, let's just say we got stopped out and we go, right, no problem. We risked 5%, 2%, 3%. And then you just go, right, we're going to enter on the next 1 bar high. Bang, got the bullish reversal. And you do the same again. And you go, right, the entry point is 1 bar high over here. And your stop loss is going to be down here. And by the way, just welcome to the reality of if you're doing trading and swing trading, right? And then you go, bump, we would have got entered. And then the market, let's see what it did. Bum, 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 bum. Let's see what it did. It went sideways, sideways, sideways. Boom, took off, right? That's the whole name of the game. In fact, I'm glad that it got stopped out because most people don't realize that. Jesus Christ, look at that. Boom, boom, and it went right to that next point. Now, why am I showing you this? Now, there's different ways of making money in crypto. You can do staking, you can do yield farming, you can do IDOs, you can do, which is launch pads. You can do just a number of things. You can remortgage your Ethereum. But I found a lot of people are just trading and going for 20% gains, 5% gains, 50% gains. But here, this particular trade, if it unfolded, let's just say you're doing 1,000 each time, and here you got stopped out and you lost 1,000, and you go, shoot. But hey, high probability setups. We don't know what's going to happen. So here we made a decision. It was a business decision. It was logical. It was mechanical. Got stopped out. Hey, we just can go by the information at the time. Then we go about Fantom's a strong project. Technicals are still holding up. Is now gone deeper as a correction. Hit the 78.6% retracement. All right. The next bullish reversal. We just put our order in again, but this time it did take off. It went from, what was it? Let's just say the entry point was 0.0. Let's call it 0.02. Yeah. And went all the way up to, geez, what's that? 0.6. 0.16, right? 0.16 divided by entry price 0.02. That's an 8x. Yeah, you would have risked 1,000 to make 8,000. Hey, that's not bad. That's not bad. Then you could have got tighter stop losses as well, but because we didn't really take into account the stop losses here. But the main lesson, right, before we get kind of caught up into trading and swing trading, is Elliott waves and Fibonacci can allow you to read the markets like a pro, and even what's going to happen next, what's likely to happen next. We've hit this wave 3. What I would anticipate is then some type of pullback, like a wave 4, and then we'll anticipate some type of wave 5 to follow. And then what happens? Bump. Okay, just shot through. Look at that. Overextended. Oh, Jesus Christ. Look at this. Look at this. Is this the recent? Are we up back to today's data? Look at this. This is crypto. This is another important lesson, by the way. Right? Even though this is a high probability wave 3 zone, and I would anticipate a wave 4. Again, we didn't take the momentum into account. We would look at the weekly momentum, we would look at the daily momentum, etc., etc. But based on the previous swing and the relationship, that's what we'd expect. But you should never be exiting at a fixed price unless you're doing like really, really, really young projects at a fixed price. And if you've got the tools, what you would do is you would exit on swing lows. What does that mean? Well, what I would often do is I would go, right, it's reaching this price here. I'm going to put my stop loss at the swing low. What does that mean? Right? If the price goes below this swing low like it's here, if it goes below here, I exit. And then the market goes a little bit higher, Then you go, right, great. I'm going to move my stop loss to this swing low. Why? For this exact reason. No one knows what the price is going to go to, because the price is based on buying and selling behavior. And then it could be a news announcement. There could be something, I don't know, Fantom gets listed, or it goes onto Binance, or this happens, that happens, or the minimal viable, whatever it is, a partnership's announced. And then this overextension, we want to be in the game. So if we did the swing low strategy where you go, I'm just going to trail it, trail it, trail it, I'm anticipating to get stopped out. Everything tells me I should get stopped out in the next few days. And it just goes bang. Look at this. Jesus, look at that. And then it goes up and then goes down. And then you go, right, now we move our stop loss to this swing low, right? Now it might do an A, B, C, and then stop us out, or it might just continue. So, but now by doing this, the price will be zero. Our minimum profit is 0.42. So now it's 0.42 divided by the entry price 0.02. It's like a 21x now, 21x. So now that's decent money, right? That's decent money. So now what's going to happen? I don't even know. Let's just unfold the data. Boom, should get stopped out. Is it going to get stopped out? Boom, boom, boom. All right, get stopped out. And then you just look at the market again and you go, is there another buying opportunity? Again, you will need to have more information, but here it looks like an ABC correction, da 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 da. But let's just take the data into today's date. Look at this, what happened. There's a big, fluctuating market here. Bang. So now it did a final swing. Look at that movement. Bang. It's just beautiful. Beautiful. Yeah, it was like really overextended. Came back down, up, and then it did this really big correction, and then boom. So now let's just summarize it. Today's video was much longer than anticipated. I wasn't planning on doing this like this, but I was actually just looking at Fantom and I was like, okay, a lot of people are gonna be tempted to buy. And if you're just buying the underlying token and the immediate price potential is here to here, it could overextend. Wave fives often overextend. We just saw one just now, but the more mature the project gets, the less the overextension. But the more high probability zones is, we'll probably get a price pullback to around $1, $2, and then the high is $2.50. So what's that? 25%. So if that's big money for you, 25%, especially if you're playing with big money, then by all means. But there might be better, opportunities, and ideally you want to be looking to get in that wave 4 lows and wave 2 lows. Whoa, we covered a lot today. We covered a lot. And by the way, I'm using new tech and I'm trying to get the sound better. I know my last CKB video, the sound, this mic was all the way over here, so hence I got the mic right up. So let me know how the sound was today. So if you like today's video, like, subscribe, hit the bell notification. Let's finish on a quote. Let's go. I'm going to read the same one as yesterday because you might not have heard it, which is Confucius. It does not matter how slowly you go as long as you do not stop. Take my Elliott with Fibonacci free masterclass. I'm telling you about a lot of work to simplify it. It's really kind of broken down. It gives you opportunity to buy some really discounted courses where it really fine tunes everything, the basics, intermediate, the advanced, Fibonacci retracements, extensions, and external retracements, which most people don't know about. I even add in some bonuses. There's a course, how to 10x your money bonus. That's just a phenomenal strategy. People are buying the course just for that bonus. But also, I covered some momentum stuff as well. I threw that in as a bonus because when you have momentum, pattern, price, and time, I am looking maybe to do a future course on that because that's fries people's brains. So there you have it. Like today's video. Let me know today. I don't know how long we've been going on for. We've been going on for a bit longer than usual. I just kind of got a bit carried away. Hopefully, got a major value that you can see. Elliott and Fibonacci are great for entry strategy, but also an exit strategy to see the highs and the lows with high probability. All right, I will see you very soon.